Hello and welcome to Doyle Clayton's webinar all about the IR35 reforms and giving you a practical approach to satisfying your compliance obligations. So I'm Declan Bradley, I'm a legal director here at Doyle Clayton and a work status expert. And I'm joined today by my wonderful co-hosts from the IR35 world. We have Andrew Timpson, a partner at RSM UK, the global accountancy powerhouse. And we have Ray Walker, the compliance director at Worksome, which provides contingent workforce and IR35 solutions. So before we get into a bit more about what we'll cover today, I first have a little bit of housekeeping. So you can see the slide which we'll be nominally working from today in the control panel, which I think you've access to. So do feel free to follow along. Also tomorrow, you'll get a copy of the webinar, and straight after the webinar today, you also get a feedback form. If you could fill in that feedback form, that would be great, as it allows us to develop content for the likes of yourself. And if you go to our website, doyleclayton.co.uk, you'll see all our past webinars and podcasts, all about things related to the workplace, if that interests you. Okay, and anyhow, and back to today. So I will be taking you through a 5-step audit program, which I've been following with my clients for this past year to help them prepare for the IR35 reforms coming in April 21, obviously having been postponed from last year. So what I'll do now is I'll pass you over to my contacts and to let them chat through what they'll be covering today. So over to you, Andrew.
Thanks, Declan. Yeah, so today I'm going to be taking you through the basics of IR35, just some of the basics. I'll touch on that for you, and then move swiftly over to looking at HMRC investigations. What can you expect? Some practical positions and how to get comfortable with getting the process right, etc. So Ray.
Thank you, Andrew. Yeah, so I'll be looking at the tech solutions that are available to help with the IR35 requirements when the reforms become live. Thank you, Declan.
Excellent. So without further ado, I'll pass back to Andrew to talk through that brief refresher on IR35 reforms, and probably more interestingly, that inside track into how HMRC may approach enforcement of the reforms. So over to you.
Thank you very much. So first of all, I just want to touch on what IR35 is, just a bit of a recap. So IR35 is actually the press release that was issued in the year 2000 that explained all the rules. It cottoned on, and it's become sort of the consensus term for what we now look at off payroll workers. It actually, and it still currently protects engaging companies from any pay-as-you-earn NSE exposure, which is why it was so popular and still is popular. But things are changing. So the protection is to be abolished. It's being abolished. The reason why it's being abolished is because it's looking to tackle the disguised employment position that we were considering way back when with the Freedom of Information Act, when that came out in around 2015, 2016. Everybody jumped on the bandwagon there for the likes of the BBC and NHS, etc. It's a tax status change. It's not actually a legal status change, but there are many legal ramifications, which Declan will come on to. The change in the rules will be effective from the 6th of April 2021. Not long now, only a few more weeks really, if you're looking at it like that. It's going to apply to all medium and large companies. Small companies will not be impacted. Small companies will still receive the protection and that, like we've always had for the last 20 years. Definition of a small company, just to run through that, it's turnover of less than 10.2 million, assets on your balance sheet of less than 5.1 million, or less than 50 employees. If you have 2 or more of those, you will be considered not small and therefore fall into the medium or large. But be careful, a word of caution, you need to consider your group as a whole. If you're in a group, it's not your individual entity that matters, it's the group size that may well bring you in to the position. So just consider that. As an engaging company, if you are a medium to large and you fall into that definition, as an engaging company, you will be responsible for assessing the employment status of the contractors and providing or preparing the status determination statement. That's the magical conclusion that you have to prepare and provide to the intermediary stroke contractor. If you're not the fee payer, so say you engage or you outsource the position to an agency for your labour supply, they will be known as a fee payer. So if you have a fee payer in your supply chain, you will have to provide that SDS to the fee payer because they are responsible for enacting the decision on the status determination statement. It could include payroll, it could include gross pay. If you do not provide the agency or the fee payer with the SDS, the pay-as-you-earn NIC exposure risk will still lie with your company. It will not pass on to the agency. Very, very important there. Looking at the assessment, how do you assess? What do you have to consider? Well, unfortunately, there is only limited legislation when it comes to whether somebody is determined as an employee, and there's absolutely nothing for self-employed. It's just a matter of default. So what the tribunals have come up with and what the revenue follow is a set of factors, what they call the factors of employment. So there are 5 of them. They start with substitution, control, financial risk, mutuality of obligation, and integration. Now, they will say, the revenue will say there's no one defining factor, which is actually incorrect. Substitution is the one defining factor. If a contractor can provide a substitute and pays them personally, they will be determined as a off-payroll self-employed in their own right position. However, as probably many of you are aware, general engagement of individuals off payroll is for their expertise and experience. Therefore, substitution in the majority of cases doesn't actually apply. So that being the case, the revenue look at that as a medium weighting, and you then move on. And the other 3 main elements that the revenue will focus on are control, financial risk, and integration.
Sorry, Andrew, I've just cut in there, apologies. You talk about the revenue concentrate on those other 3, but obviously the mutuality of obligation isn't a part of that, but it is part of the factors of employment. What's going on there? Why are they sort of ignoring that?
Yeah, it's a great question. So mutuality of obligation, the revenue used to have it as quite a large test within the factors of employment, and sometime around 10, maybe a bit more years ago, they looked at it as a medium weighting. And the reason why they did that is because they said, well, if somebody accepts a task or project or service, then they are obliged to provide that service. So any acceptance equals obligation, and as a result, they've looked at that across as complete medium when they're looking at the spectrum. It is actually looked at differently with the tribunals. The tribunals do put weight on it, and the most recent case with the Professional Match Officials Limited, it actually came out to be a very, very high factor when they were considering the case, and the case that they won. They went to self-employed status, and mutuality of obligation was an overriding factor there. So yeah, unfortunately, the revenue don't pay as much attention to it. But thanks for the question. Just finalising on this, you need to look at all these factors on a weighted balance. So just because you've got a high degree in one factor doesn't necessarily mean that it's going to be employed or deemed employee. You need to consider the whole as a weighted balance. And if you need to know more about that, just let me know. So moving on, I want to look at the HMRC investigation, how they'll approach the investigation, what you must be doing to be comfortable going into that investigation, that actually you're doing all the right things. So very recently, we've been lucky enough to at RSM host a HMRC webinar around IR35, and they just gave us some insights. They're very open, they didn't hide anything. And couple that with what we've been helping our clients out within the public sector, because they've been in this position for the last 3 years now, we've got some really good insights. So the timeline for any HMRC activity specifically around IR35 or off payroll investigations is typically 12 to 24 months post implementation. So post April 2021, go forward 12 to 24 months, you may see more revenue activity and some letters dropping down to say we want to look at your position. That's not to say they won't do it earlier, because the way the revenue do investigations now is they expand on expenses, etc. But specifically around this, they're looking at 12 to 24 months. The reason why they're able to just focus on the one aspect, i.e. off payroll, is because they have that authority. Back in the past, they couldn't just target either companies or a specific item. Back in the good old days where they did compliance reviews and it took them all week. Now they're more focused, they're more commercial. They've got some really good, strong training. commercial training, technical training. But that's not to say that they won't do a light touch. So what they have said to us is their investigation will happen. That's categoric. But depending upon how you as a business have adopted, have processed, have approached the compliance around off-payroll working, they will look to do a light touch, and that light touch is on penalties. And penalties are a big thing in their investigations over the last 5 years, but they have said that they'll look at that light touch position. But what you must have in order to get that light touch on penalties is 4 or 5 different elements. The first one is a policy. You must have a policy for your working position that is known throughout your stakeholders in your business. You need to have a diligent process that is recorded. You need consistency of process for all your assessments. You cannot be biased towards certain people and not towards others. You need that consistency of process. You need consistency of determination. So the assessment has to then pull out that consistency for your status determination statement conclusions. And you need to have an audit trail for each element of that process. If you have that, hopefully then a light touch will apply when we're looking at penalties, but it doesn't mean that they won't necessarily disagree with what your STS conclusions are. If they do disagree with your STS conclusions, they have a manner of different elements that they will go into force with. The first thing they'll do is they'll approach their HMRC technical team. They'll have an intervention by the technical team. The technical team sit behind everything. You never see them, you don't hear from them, people don't even think they exist, but they do. And they will review what the position is, and they will go back to the officer and provide a conclusion. They will provide a termination from that engagement. If it differs from your SDS conclusion, you can appeal, but the appeal will need to have new information. What you can't do these days, just say, well, you need to look at it again because you're obviously wrong. Unfortunately, they don't play like that. So what they'll end up doing is saying, no, you need new information if you want to have an appeal with us. Now, if HMRC doesn't change its stance, even if with the new information, so they suggest that the appeal hasn't been successful, you'll have 2 choices. You can either go to tribunal, which is very costly, very long, very drawn out, and can obviously go not in your favour, or you can agree with HMRC. If you agree with HMRC's position, you're likely to face pay-as-you-earn and national insurance exposures and liabilities, as well as apprenticeship levy charges if you are within the apprenticeship levy scheme. Penalties, hopefully there'll be light touch, so there won't be any. But the next thing that you'll need to consider is how are you going to move on with that engagement? What is your future compliance and governance considerations? If you don't have that, the revenue will not allow you to just keep going on an off-payroll term, because that will be deliberate, and penalties will be even higher. So, just to recap and to get you prepared, 6th of April is the deadline here. We're working towards. It doesn't stop at the 6th of April. It's just to start, really. So you will need a process for ongoing when you're onboarding new contractors. But for this first period, prepare your process for assessment, prepare your process for the status determination statement, and concluding that, audit review of all engagements. So intermediaries is where the focus is for the 6th of April. But when the revenue come and do their investigations and their reviews, they won't just consider intermediaries. They'll look at the whole population of your off-payroll workers. That includes sole traders. They're not impacted by this change at the moment, sole traders, but we recommend that those status reviews are undertaken as well.
And if I can just jump in there, you might have some of the audience thinking, look, I'm going to have my work cut out for me before April, just dealing with IR35 contractors and getting that process underway. And given that timeline that you mentioned for HMRC enforcement, it's not going to happen immediately. Do you think it may make sense for some businesses to just do IR35 now up until April, get that sorted as much as possible, and then maybe in the summer look at sole traders? Will that work, do you think? Something like that, you sort of break up that work?
Absolutely, resource and time for everybody is scarce. So the immediate mandatory position is definitely up to the 6th of April. If you have a plan, so I put a matrix plan together, just in case the revenue did come in and you hadn't got around to looking at your sole traders, you could explain to them this is the process that we're going through.
Okay.
But if you can't fit it in between now and 6th of April, certainly have that plan in place and do it at the most earliest convenience for the business.
Okay.
And just finally, just a couple of points. One is the contractual relationships and the day-to-day working practices mirror each other. If they don't, you'll have questions from the revenue. And communication. If you haven't already started communicating with your contractors, your off-payroll workers, do so. Do it early, because then you may not be getting into any disagreements down the line if they're very, very informed and know what the position is up front. Thank you.
Excellent. So that was extremely useful for me, so I'm sure it was useful for the audience as well. And look, we're already hearing those magic words, audit and audit trail. So how do you carry out an IR35 audit? Well, I'm going to take you through that now. So the first step, well, this is a 5-step plan. So the first step in the 5-step plan is checking how IR35 reforms might be relevant to your organization in terms of timeline. Do this now, straight after the webinar, get on this if you haven't already. So the first thing you might want to do is check to see if your business, the end user hire, the client, is a small company or a wholly overseas company, in which case the IR35 reforms should not apply to your business. So Andrew has already mentioned the conditions to be a small company, and if you fail to meet those for 2 consecutive financial years, you'll be a medium or large company, and so caught by the IR35 reforms. Also on wholly overseas companies, if you have some kind of permanent establishment here, like a building site or an office or a factory, or an agent doing work on your behalf or performing business on your behalf, then you may have a UK connection and you may be caught. Both of those areas are quite complex, so feel free to get in touch to discuss that further if you need to. If the IR35 reforms do look relevant to your business, it's the next step then is to look at who in your off-payroll population is relevant to IR35. So as Andrew mentioned, it is the contractors who operate through an intermediary company, like a personal service company, like Declan Bradley Services Limited. So you might figure that out by chatting to your legal teams or your finance teams to see if you're dealing with an individual or if you're dealing with a company. So for IR35 purposes for an audit, you could disregard sole traders, you could disregard agency workers or those contractors operating through a contracted out service company like the emphasis in the IT world. But obviously, bear in mind what Andrew just said about sole traders, and you should do those at some point. So doing all that, you should have an IR35 list of contractors together, and to whittle that down further, you might look to see who may not be around come April 21, and in which case you don't need to do the audit for them. Also, if any contractors are wholly or based themselves overseas in South Africa, New Zealand, wherever it might be, and they don't really have a UK connection other than providing some services from afar for you, then they should not be relevant either. So you can whittle them off the list. Okay, so that is the first step, figuring out how IR35 reforms are relevant to your business. Then the second step in the 5-step plan is taking that list of IR35 contractors and doing an assessment of it against those employment status factors, which Andrew has mentioned. And again, get on this straight away. Now, I think you'll want to be doing this within the next week, and then give yourself maybe 3 or 4 weeks to finish that, depending on how many contractors that you have. So the first thing to do for this step is to get together your investigation team, which should be made up of suitably senior people from the likes of HR, legal, finance, operations, that kind of thing. And they should be suitably senior so they can throw their weight around to get the relevant information that they need. And then they have difficult conversations with your senior management about new budgets that may be needed, about big transformations that may be needed in your operations. That investigation team is then going to need investigation tools to find and record the relevant information. So for example, I provide my clients with a due diligence spreadsheet with contractor names on one side and lots of questions along the top about those employment status factors, and then an indication in the spreadsheet about how to record that relevant information. I also provide contractor questionnaires and questionnaires for their points of contact at the business. They dig a bit deeper on the reality of the matter. And I also provide a template status determination statement with written guidance and advice from myself and calls and email to help the investigation team complete those documents. So what that does is that creates a nice audit trail so that then you can show contractors, you can show recruitment companies, you can show HMRC. Look, this is the basis on which we made our decisions, and that should help show that you've taken reasonable care as well. So you've got that audit trail, you've got all the information. So next, what the investigation team will do is use that knowledge that they now have about IR35 to make a provisional status determination. They should also use resources available to them, like the government's CESS tool, Check Employment Status for Tax, which Ray will talk about more later. But it's basically a piece of software on the .gov website where you pump in a load of answers to a load of questions, and that gives you a status determination and gives you an indication of where HMRC might fall in the matter. And also, the investigation team should use their professional advisors for deeper analysis and tricky issues, as that all helps show that you've taken reasonable care. Okay, so that is step 2, and ideally you would have done that by, say, mid-February, something like that. So what you then have is lots of information to show where your contractors may be falling, inside IR35, outside IR35, or somewhere in between. So the third step then is about taking stock of that information and thinking about your options. So I would say give yourself a week in sort of mid-February with that investigation team. It's having those difficult conversations with senior management, with the people in the business who use the contractors. And look, if it seems like all your contractors are outside IR35 and you've got a great system in place for gathering the information, that's great. Just make sure you've got your audit trail in place and don't make any big changes between now and April in case that moves the dial back to an inside result. However, based on my experience of having carried out these audits with clients, you might find, and particularly where you maybe have more than 5 contractors, that there's a mix, that you have a lot of inside IR35 contractors, some outside and some who are somewhere in between or indeterminate. And for those somewhere in between contractors, I would just consider them as inside for these purposes. So what are your options if you have lots of inside contractors, inside IR35 contractors? So you could restructure the engagements to try and bring them back outside and do evidence that with new policies, new contracts, and email evidence, etc. So things you could think about are making sure that it's very clear that there's genuine substitution, that you, the client, do not have a veto over substitutes that are provided. You can make it very clear that the contractor is in control of the delivery of the services, and then maybe also move away from hourly rate general services to maybe more specific project fixed fee work. Okay, so that should hopefully help move the dial back towards an outside IR35 result. Do be aware though, for project-based work, that you'll need to do a new status determination statement for each project. So extra admin, but hopefully it'll all be worth it in the long run. Some of you may be listening and thinking, look, there's no way that we can make those big changes, especially in the time available, to bring those matters back outside IR35. And some of my clients actually said that to me. So what are your options then if you have these contractors who are inside and likely to stay inside? So you could keep them as inside IR35 contractors. It's a more light touch way of bringing the staff on than, say, bringing them on as your workers or employees, because IR35 is a tax decision, not an employment rights decision. They would have to run off to the tribunal and claim for those employment rights, which many may not do. If you are going to keep them as inside IR35 contractors, then make sure the contractors and any recruitment companies are on board from an early stage with that, and do think about the fee as well and how that may be impacted by the extra costs that come from an inside result, which Andrew has talked about. So some of my clients have said, look, our contractors are valuable, we'll gross up the fee. Some have said, look, we'll go in the middle, we'll take our hit on the employer's NICs and apprenticeship levy, the contractor takes their hit on the income tax and the employees' national insurance contributions. And some have said, look, we the client will not be any worse off, so we're going to reduce that fee to net off our costs. So do have a think about that, okay? And
so, Declan, just as a jump in there, if fees are being considered and reduced or changed, or do contractual terms need to be changed as well?
Yeah, if you're making any change to the engagement, definitely change the contract to reflect that, to lower the risk of breach of contract claims. And in general, look, this is a big legislative change. I think every company who uses these type of contractor should be updating their contracts anyway to reflect the new information flows and cooperation and party obligations that are needed as a result of the IR35 reform. So definitely do an overhaul of your contracts anyway. Okay, so hopefully that answers that question. And look, so yeah, so you can keep them inside IR35 if that is what you want to do. Other options available, you could swap out the contractors for PAYE agency workers. So you're swapping out the tax risk for the agency worker regs 2010 risk in that case. But no, you might find the HR people among you are more comfortable with that, and that's fine. Also, you can think about, instead of using lots of contractors to perform a certain project, maybe just outsource that project to a contracted out service provider, like emphasis in the IT world, which I keep mentioning. In that case, the outsourced contracted out service provider would be the client for IR35 purposes and not you. Just be aware though, there can be complicated employment law implications with an outsourcing, so do feel free to get in touch to discuss that further. Okay, and whatever you do, if you will keep IR35 contractors anyway, then have a think about using an external fee payer if you don't already. If the matter's inside IR35, then they have to run that new style payroll, which your internal team may not be trained to do. If it's an outside result, then they take the risk of HMRC disputing that. But because of the debt recovery rules, and HMRC can go back up after the client to get any unpaid debts, then make sure you're using creditworthy and reputable service providers. Okay, so that is step 3, sort of considering the options available to you, which you should be doing in late to mid-February. Okay, and then the 4th step is deciding on what you want to do and implementing any changes in good time before April 21. So I would say by late March, you'll want to have your new arrangements in place, your new IR35 list in place with the new contracts and the new audit trail updated by then, so that come the 5th step of satisfying your IR35 obligations by the 6th of April, you're ready to pump out that status termination statement before any payment is made for services performed from the 6th of April, ready to handle any appeals within the 45-day deadline, and also if it's an inside result, you or your fee payer is ready to run that payroll. So the 6th of April, as Andrew mentioned, is not the end, it's just the start. So these compliance obligations will be enforced as long as the legislation is enforced. But doing all this type of audit should put you in a good place that you can onboard new contractors, keep on to review current ones, pump out those status determination statements when needed, etc., and handle any appeals. And what Ray is going to cover now is how technology can help with all of that. So over to you, Ray.
Thank you, Declan. Yeah, as you say, technology, a lot of clients who I speak to are fearful of the impact these reforms are going to have on their business from just a pure labour perspective and how they're going to manage these. Now, I look at this, technology is obviously there to help, should be there to help at the very least, but I look at this in a slightly different way and say that what we need to be considerate of at the same time with technology is how it can actually support the reasonable care aspect. And so I'm going to be looking at reasonable care and also the effect that that's going to have on the fee payer, which is quite key. But why is it key? So let's talk about who the fee payer is. Andrew spoke about it earlier, but the way a process will work on every assignment is the client will start off as the fee payer. They're at the top of the chain. They have to make a status determination, and they've got a number of other responsibilities that, as long as they satisfy that, they pass that fee payer role down the chain to the next company. If it's a very simple chain and it's a client with a recruitment company and then the contractor's PSC, then the recruitment company remains the fee payer. So the fee payer will end up being the company that's paying the contractor's PSC. The key part to the fee payer, why is it such a big term, is because they're going to be liable to report and pay any relevant tax and NI to HMRC. They're also going to be the first in line if anybody who's outside is actually then deemed to be inside IR35. So reasonable care, why did I mention that? Because if we foul reasonable care, or whichever party fouls reasonable care, they have not then passed on their fee payer responsibilities. They then hang on to becoming the fee payer, which means if there is a HMRC investigation, which HMRC are successful with, whoever's the fee payer will be then will become liable for those relevant financial sanctions. So what does reasonable care look like? How can we make sure we manage with that? HMRC have provided guidance on this, but it is suitably vague because it comes down to, again, opinions. But in their guidance is about accurately applying and keeping records of employment status principles, seeking the guidance of professional advisors, applying the HMRC guidance on determining the status, and checking the existing determinations to ensure they remain valid. As both Andrew and Declan, you said, that it's not just the 6th of April and that's where it stops. That's just the start button. So we must make sure that whatever determinations are active and live, they remain the case and the situations remain the same throughout the length of that assignment. But what does all of that mean in layman's terms? Well, as we've all said, you've got to make sure you've got the correct processes and knowledge to manage each status determination. If you've got an incorrect, somebody who doesn't have the knowledge on IR35 making a status determination, it puts you at risk and an argument against reasonable care. You've got to continue to review each case throughout the period of an assignment and redetermine if needed. If situations have changed, then you've got to do a new determination. It may well move somebody as inside. The worst thing you can do is to do nothing. They have moved as inside and you haven't actually managed that failure of reasonable care again. And then the big one for us is to make sure you've got an audit trail that can be called upon for any HMRC investigation. HMRC, as Andrew said, are going to ask how you've actually managed how you've achieved and got to that point of somebody's outside IR35. That audit trail will be able to sit back and support all of what you're doing. We've also mentioned about CEST and the third-party tech solutions that are out there. There are a number of third-party tech solutions, and the question is why, and it mainly comes down to the weaknesses of CEST. That's why people see that there's gaps there and we can fill those. So the first thing we've got is CEST does not integrate with any third-party software. I've had conversations with HMRC to understand whether they're likely to change this. They have no plans to change this at all. CEST will always operate, in their eyes, as an independent piece of software. It's also worth understanding you also don't have to use any software to make any determination. You can do it just out of your own opinions. It obviously comes down to having software helps to be able to defend when during any HMRC investigation. We're back to CEST. CEST doesn't provide that audit trail of events. Once the SDS has been created, you have no audit trail. That SDS has to be distributed to certain parties in the chain. You will need to record that and recall that at a certain point in the future when there's any investigations. So you've got to make sure you've got the right processes to understand where those documents are, who's actually moved them around, has it been done on a timely basis, has it been sent to the correct parties. CEST also relies on the user having sufficient knowledge to generate a trustworthy result. Again, if you're in HR but you've asked a line manager to run a CEST check, do they understand IR35? Is it possible for HMRC to come in and actually question and say, well, that individual has answered the question to get an outside determination, but it's not accurate and it wasn't actually a knowledgeable answer. So the tech solutions, as I say, they are designed to fill those holes that CEST have put in, that are within CEST. That means that they're going to be maintained and allow the client to have access to IR35 experts. So that satisfies the professional advisor side of things. Status determinations and the ongoing monitoring processes can be quantifiable in terms of time and cost. So as I say, the clients are worried about how much of an impact this is going to have on their business. They can quite quickly understand how many minutes or hours or days it's going to take to do each individual determination. And therefore, they can then design their business around that as to whether they increase the amount of contingent workers or decrease because of the way that they're managing their processes. The best part about the independent tech solutions is there's insurance policies that have, the insurance world have come out to underwrite those financial risks of engaging outside IR35 contractors. So people are fearful, if I use an outside IR35 contractor, I could be challenged by HMRC. These insurance policies are there to protect against those, and will provide cover against the legal cost and cover against any additional taxes, fines and penalties put against an outside being determined as inside. So the tech solutions really do mitigate against the reasonable care risk. How do they do that? Well, the first thing they do is they provide control, meaning that the right users are performing the right tasks at the right time. They're going to provide efficiency, so it means that the effort required by clients after the reforms go live can be managed quite easily.
And if I can just
I
could jump in there. So you have these users using this tech platform and they're answering questions as part of the status determination. Are they able to upload like real-time evidence, like contracts, invoices, screenshots from emails? Are they able to upload that to the system so that the system and the people behind the system can then use all that information to make those status determinations at the end? Is that how it works, like a digital audit trail, which sounds excellent to me? Okay.
100%. It can upload everything that's connected to that status determination. So you can then grab that whenever's needed, and it provides that evidence to whoever may need it, because it's not necessarily just HMRC investigation. It may be an internal audit to make sure that you're managing your contingent workforce in the correct way. But yeah, these tech solutions provide that one-stop shop for everything around the IR35 piece. So just to go back on sort of what the tech solutions are providing, they're going to provide scalability as well, which they'll allow you to flex your workload around the demand. So if you have a project that's going to mean you've got to double your contingent workforce over the next 3 months, you can continue to use that same tech solution and just up the demand on that tech solution. And at the end of those 3 months, your demand just decreases, but it won't have any impact on what's happening on a day-to-day. Those solutions will be able to communicate with the supply chain. As I said, there's certain time frames that you've got to deliver your status determinations. You've got to deliver them to certain people, and you can make sure that those platforms will be able to manage that communication. They provide the audit trail, the all-important audit trail, which enables everybody to come in and be able to understand exactly what's happened on a per case basis, on a per user basis, and protect against any sort of inquiries that you might face. And then the best part is that commercial protection. They have the insurance policies that are out there that can mean that you can comfortably engage an outside IR35 contractor without the fear that you're going to get bitten at a later date. And that's why I feel tech solutions are a much better alternative as opposed to CEST. Declan, I'll pass back to you.
Excellent. So that brings us to the end of the presentations, which I hopefully you found useful. And what we'll do now before we move into some questions which you've kindly provided is we'll focus on a case study to bring together all the different strands of the discussion today. So you should be able to see that case study in the slides which are available, but I'll read through that now anyway. So we have a UK ad platform technology business with around 70 employees and 12 million in annual revenue for the past few years. There are 15 contractors with personal service companies who perform development roles. It's their main job in which they each work on full time. They've done so for a couple of years on the same contract which was given to them at the outset. So the Chief Technology Officer, the CTO, regularly gives them tasks to do, and which tasks the CTO manages and reviews on a near daily basis. The CTO moves them around different projects as the CTO wishes, and they earn a daily rate of £300 plus VAT, assuming VAT's payable, and no substantial expenses are incurred by the contractors to perform their role. So that's the case study, and the questions flowing from that case study are, so the first one, what are the key IR35 risk factors and how should those be investigated? And then the second question is a two-parter. So we've got, if the relevant contractors are deemed to be inside IR35, how might the annual cost to the company of 93,600, which includes VAT per contractor, be affected? And how can an IR35 tech platform make the ongoing compliance steps more efficient? So I think the first one is for me, and then we've got Andrew and Ray will cover the next bits. So if I just take the bullet points in turn, so the first and second bullet points lets us know that these are IR35 contractors, and the IR35 reforms are relevant to this UK business, which is big enough to be caught. Okay, and we also then have the third bullet point, which shows us that these contractors are basically coming in like employees 9 to 5, Monday to Friday for a few years. So they seem part and parcel of the organization. There's probably a certain level of financial dependency and probably a significant level of mutuality of obligations here, all pointing to that inside result. We then have the CTO in the fourth and fifth bullet points is basically in control of the delivery of the services, again, pushing that towards that inside result. And then we also have a lack of financial risk taken on by the contractors in the last bullet point, again, pushing that matter towards an inside result. So to investigate this, if I was the client, I really want to drill into the detail just to make sure that the overview matches the actual reality. You never know, you might find the contractors are actually in control of the delivery and not the CTO. So I'd be interviewing the CTO, interviewing the contractors, giving them questionnaires, that kind of thing. And then looking at more objective evidence like email trails, screenshots of Slack messages, that kind of thing. And then pulling all that into a nice audit trail to make my decisions. But I think barring some miracle around genuine substitution, it's looking like an inside result for everyone. So I'll pass you over to Andrew now, who's going to crunch through some numbers around that.
Thank you, Declan. So if they are inside IR35, the fees that will be paid will have to be subject to payroll operation, and therefore pay-as-you-earn and NIC deduction. So of the 93,000, which includes the VAT that we've got here, the first thing we need to do is reduce that value by the VAT charge. VAT is not chargeable to pay-as-you-earn and national insurance. So there's a bit of admin we have to do, and that reduces it down to around £78,000. It's that value, obviously on a monthly basis, if you're paying the monthly, but it's that value that has to go through pay-as-you-earn and national insurance. So the additional cost to the company will be the national insurance charge, employers, which is the 13.8%, and if they're inside, the apprenticeship levy charge as well at 0.5%, that has to come off as well. So it's around the £11,000 mark per annum for one contractor. Multiply that up by the 15, you're looking at around an additional cost of around £160,000.
Okay.
Sorry, Andrew, we touched on it earlier in the conversation about if the client was to say, I'm not going to cover that cost, that's not my problem. Some people do go with that. How does that play out? What do they need to do, and how does that then happen?
Well, unfortunately, what the client can't do is say, I'm going to pass this directly on to the contractor, and it's going to be their exposure. The rules actually forbid that. There is clauses within there to mean that you can't do that directly. So there would have to be some negotiation on fees, pay, and at that point you're getting into, from what we're discussing before with Declan, getting into contractual term changes as well. So if you're looking to potentially reduce your risk of budget increases, you may have to look to speak to Declan and look at a contractual terms change as well.
Yeah, you'll have to reduce that fee, and you'll have to get a new contract in place, or at the very least some kind of letter of amendment. But as I said, contracts will probably need a general change anyway in light of the IR35 reform. So yeah, that will be needed. And then on that last point for yourself, Ray, how could an IR35 tech platform make the ongoing compliance steps for a company like this more efficient? Okay,
yeah. So the tech platform, firstly, it's going to help with the status determination at the front end to make that nicer, much easier. It's been deemed as inside, but it will make sure that the SDS is being passed over to the different parties in a timely manner. It will also continue with any ongoing compliance, so that to make sure that those situations haven't changed, it will do a review on a regular basis in case there has been any sort of assignment creep. Probably the biggest part to an inside IR35 is the client-led dispute process. So they will be designed to be able to manage that dispute process so that the actual contractor can lodge their dispute, put down whatever their reasons for that dispute. The client can then understand that, look into that and judge whether there's any material changes, and whether that inside can now be changed to an outside. So again, it really becomes the focal point of the communications, I would say.
Okay, excellent. So look, I think that brings us on to questions which our audience have kindly provided, mainly in advance. And I think having looked at the list, I think we've probably covered quite a lot of the questions already anyway as part of the presentation. We'll run through some more specific ones now, but if you feel, the audience members, that maybe your question wasn't answered as part of the presentation, our contact details are on the last sheet, or they should be anyway, of the slide, so feel free to get in contact with us to answer any outstanding or burning questions. But moving into some specific ones, which we can cover now. So the first one here is, in which areas is self-employment for IR35 purposes likely to differ from employment law purposes and what risk follows. So yeah, so that question correctly assumes that an IR35 decision is different from an employment rights decision. So as I mentioned, the individual contractor would have to go off to a tribunal and claim to be a worker or an employee for employment rights. And the tests are fairly similar. However, if the individual contractor can show that there is personal service, there is no genuine substitution, then they pretty much will get in as a worker in the employment tribunal, which is like a lesser form of employment, but they'll still get holiday, national minimum wage, whistleblower protection, that kind of thing. On top, if they can show that there's a significant level of mutuality of obligations where they have to do a certain level of work and they expect to get a certain level of work, likely then they're an employee and they get the full protection of employment, which you may be familiar with. And you'll just have to take advice and decide internally how big a risk that is for your business. In reality, is your contractor is going to run off to the employment tribunal if the relationship sours or when it ends. So that is one question. Another question, which I think probably falls more in Ray's bracket, is, are there downsides to implementing a policy to only hire contractors as FTCs? Ray, I'll let you assume what is meant by FTC in this case.
Yeah, so that would be a fixed term contract is the way I would read that. And I would taking this as saying, okay, instead of let's put a ban on PSCs, and we only work with fixed term contractors, and what's the benefits? Obviously the benefits are easy, you don't have to worry about the IR35 reforms. The downsides really, in my mind, are the commercial downsides. You're engaging contractors certainly at the higher end of the chain because of the specialist skills that they're bringing to you. If you're going to enforce them on a fixed term contract, there are some contractors who are not going to want that approach. They're not going to want to be engaged in that way. So you're likely to limit the talent pool that you've actually got available to you, and who's willing to come and work for your business. You might not perhaps necessarily limit the talent pool. They might all want to work for your business under that way, but you might find that suddenly their rate has increased by 10 to 20% and their demands on that. So again, is that commercial risk more than sort of a legal risk, I would say.
Okay, and yeah, look, if what is meant by FTC maybe includes agency workers, then as I mentioned earlier, you'll have to consider the agency worker regs 2010 as well, and so there's compliance steps to think about there as well. So moving on, we've got another question, which I think is more for Andrew. So will HMRC look retrospectively at consultants who have been working with a company for, say, the past 2 years?
Yeah, so HMRC have been quite clear about this position. So they want compliance going forward. They want compliance with the rules, and they will penalise where compliance hasn't been adhered to from the 6th of April 2021. During their reviews, if they identify the SDS as being incorrect or they disagree with it, they have said that they won't take retrospective action. They'll just look at from the 6th of April 2021 onwards. So the company is kind of protected in that way, and free to make sure that they're doing what's right and doing the right thing from April 2021 onwards. What we can't say is that the individuals themselves won't be investigated, because HMRC targets and does what they call Section 9 reviews on individual tax returns. So they could be targeted that way. And as a result, consider their positions. But it won't come from a internal review of the company's employer compliance or off-payroll workers.
Okay, no, I think that hopefully is reassuring for some of our audience. And look, I think we've also had a couple of questions here around contractor agreements and what's needed from sort of April 21. So in summary, the questions can be sort of joined together as, must you have a signed contract with a contractor from April 21? And look, if you have a contract in place, which is likely an outside IR35 style contract, but going forward, it will be an inside result and you pay the tax anyway, do you have to go to the botheration of changing that contract from April 21? So look, in short, you do not need a written contract with a contractor, but I think it's definitely recommended to have a contract which reflects reality, because that just lowers the risk of breach of contract claims. It gives you commercial protection for your business, and if it's an inside result, you can actually have more commercial protections into the contract because you're taking on that tax risk already anyway. And then having a contract which reflects the reality of the matter, it's just going to make your compliance program that's so much more simple and easily, and will help with that obligation to take reasonable care. So yeah, definitely recommended. So that, I think that brings us to the end of the questions which we were sent before and which haven't been covered by the presentation already. We're a little bit ahead of time, so I'm looking at the questions.
Declan, yeah, there's a couple of questions that's been sent in.
So I can see one that says, what is CEST? So I think we may have covered that in the presentation. So that's check employment status for tax. If you go on the .gov website, you'll find the CEST tool there, and it asks you a load of questions around the employment status factors. You answer them accurately, and then that gives you a status determination, which HMRC say they will stand behind at the end. And I think Ray's already dealt with what CEST is in more detail. But if you want, feel free to get in touch with me or Ray or Andrew, and we can send you a link to CEST so you can actually see in reality what that is. So that's the questions that I can see.
There's another question on there, which is if the contractor and their company are based outside the UK, does IR35 not catch?
Okay, so I think that is definitely one in Andrew's bracket, if he wants to jump in and talk a bit about how the international arrangements may affect IR35.
So this is becoming an increasingly asked question, just because of the remote workers as well, and what individuals have done since the pandemic has hit, going to holiday homes, etc. So if you, as a UK company, engaged a UK personal service company, intermediary, IR35 company to perform services, and that individual or the director of that company is based overseas, you will still have to apply the rules, you still have to apply the assessments, and determine whether that individual will be considered an employee. If they are considered a deemed employee for the purposes, so they're inside IR35, but they're based overseas, then they should have no tax. They should have an NT code here for payroll operation. But it's that identification that will need to be done. And we've had questions where individuals are based overseas, they're working for an overseas group company, but it just so happens that they are a UK national. Does that make a difference? And in that scenario, it shouldn't make a difference, whereby you've got an individual based, say, in Spain, they have a Spanish company and they are engaged with the Spanish entity that just happens to be a UK national. That doesn't come inside IR35. So I hope I've answered that question.
There's one bit I think that you haven't necessarily covered on here, which is, if I've read this question correctly, is if it's a non-UK national with a non-UK PSC but working for a UK client.
Yes, okay, that's a good question. So in that scenario, because it is a non-UK PSC, it shouldn't impact the IR35 rules. But what you will need to consider, they'll get you by foul foul here, is if you have an individual working overseas and it's benefiting the UK company, because it's working for the UK company, there is a piece of corporate legislation which is called permanent establishment, which could mean that your corporate could have a risk of taxes in the jurisdiction where the individual is based, and depending upon the activity that they are doing. If they are doing revenue activity or profit activity, it is potentially going to put your UK company at risk in that jurisdiction. So, yeah, it won't be an IR35 thing, but it could be something different on the corporate tax side.
So I always look, Andrew, whenever I'm asked these questions, I always say to people, it's a UK tax law, so it's whether UK taxes are going to be imposed. So if the limited company is paying UK taxes, if the contractor is registered for UK taxes, and that's what you're saying there, if they create a permanent establishment, they then become a tax resident and they fall into that. So I just try to simplify, I think, for some of the the spectators of this to try and understand why this is. Now, am I correct with that, or am I sort of oversimplifying it?
I think oversimplifying is, I wouldn't say you're oversimplifying, but I think what we've got to be careful of is there are other rules that apply outside of IR35 as well. So IR35 is a UK-based position, but outside of that, you've got offshore intermediary rules, which came into force in about 2015. You've got the agency rules that came into force in 2012. So what the revenue and the managed service rules that came into force around 2008. What the revenue have done over the last few years is systematically tried to block any such positions around somebody working in the UK but being paid elsewhere. But the scenario that you've mentioned where individual has got a non-resident UK company working outside the UK, just so happens for a UK business, it shouldn't impact the IR35 rules, but it does create potentially other risks, and that's around the corporate space.
And in international group structures, I suppose companies or the groups need to be aware that they can't just move the contract from, say, contractor UK company to, say, contractor Spain company, but the services are still performed for the UK company. Now, I imagine that the companies have to be very careful around that, and there's maybe, I don't know, maybe extra penalties or anything that goes with maybe deliberately trying to avoid, or whatever the right terminology might be.
Definitely when you deliberately manage. And there's also the Corporate Criminal Offence Act that came in 2017, which would penalise a corporate as well as in a different way, just because of if somebody has deliberately decided to do something, or a group of individuals has deliberately decided to do it. If someone's based in the UK, working in the UK for the UK company, it just so happens that a contract is with the Spanish company, Spanish group company, no, it's within IR35, and you need to consider that. Okay. Hopefully, we won't have too many of those.
Yeah. Okay. And so I think, look, if anybody, Ray or Andrew, if you have anything else to raise at this juncture, or shall we? Okay. Excellent. Okay. So, like, I think that all I have to do then is to thank you, our wonderful audience, for tuning in, and I hope you find it useful. And to thank my co-hosts, Ray and Andrew. I know you've been very generous with your insights. And as I said, look, our contact details are all in the back sheet of the slide. So feel free to get in touch on LinkedIn, however you want, and we'll answer any other questions that you might have. And then finally, just remember you'll get a copy of the webinar tomorrow and a feedback form after the event. If you could fill that in, that would be great. But otherwise, as I said, thanks for tuning in, and hope to see you soon.